Let's learn now. Levying of taxes or taxation. The government makes many plans for the development of the country. It requires large amounts of money for implementing these schemes. By charging different types of taxes, the funds are generated for implementation of these schemes. Now, what is the utility of these taxes are? Provision of infrastructure or basic amenities, implementing various welfare schemes, implementing schemes of development and research in various fields, maintaining law and order, giving aid to people affected by natural disasters, defense of the country and its citizens. Now there are two types of taxes, direct taxes and the indirect taxes. Now, the taxes which are paid directly by the taxpayer are called direct taxes. Examples are income tax, wealth tax, professional tax, etc. And the taxes which are not paid directly by the taxpayer are called indirect taxes. Examples are central sales tax, value added tax, service tax, excise duty, customs duty, etc. Now, the types of taxes listed above are in accordance with the existing tax structure. Now, let us see what do you mean by the income tax. If the income earned in India by an individual, institute or authorized industry exceeds the limits specified under the Income Tax Act, income tax is levied on it. In this chapter, we shall consider only taxes which are to be paid by individuals. Income tax is levied by the central government in India. Income tax is levied under the following two acts. Income tax 1961, which came into force on 1st April 1962. The act passed every year by Parliament, which makes financial provisions. Every year, sometime in February, the Finance Minister presents a budget for the next financial year. It has proposals for the income tax rates. Once Parliament passes the budget, the proposed rate becomes applicable in the following year. Now, income tax rates are fixed every year in the budget. Now, some income tax related terms are here. First is an assessee. Any person liable to pay income tax according to the income tax rule is termed as assessee. Then financial year, the period of 1 year during which taxable income has been earned is called the financial year. In our country at present, the financial year is from 1st April to 31st March. Now, the assessment year, the financial year immediately following a particular financial year is called as the assessment year. The tax payable for the previous financial year is calculated during the current year, that is the assessment year. Now, this financial year and the assessment year, it will be clear from the following table. Now, the 1st April 2016 to 31st March 2017, if this is the financial year, then the consecutive year, that is 2017-2018 will be the assessment year. Then 2017-18, if this is the financial year, then the assessment year will be 2018 to 2019. Okay, so the financial year, it precedes the assessment year, or the assessment year follows the financial year. Now, permanent account number. On applying for it, every taxpayer gets a unique 10-digit alphanumeric number from the income tax department. So that is called as the PAN number or permanent account number. You all must have heard about the PAN card. Now, we are required to mention this number in many important documents and financial transactions. Now, use of PAN, it is binding to write our PAN on the challan used for paying our income tax to the IT department or our income tax returns and other official correspondence. PAN card can also be used as a proof of identity. Now, how this income tax is calculated? An income tax is a tax levied on an income. It is necessary to know about the different sources of income. Now, there are five main heads of income: income from the salary, income from the house or the property, income from business or profession, income from capital gain, income from other sources. Now, important considerations for computing the income tax payable by the salaried employed: the total annual income, gross total income is taken into account for calculating the tax payable. According to the sections 80C, 80D, 80G, etc. of the Income Tax Act, some deductions can be availed from the total annual income. The amount remaining after these deductions are made is called as the taxable income. Now, income tax is levied on the taxable income. Now, every year, the rules for computing income tax are changed. Hence, it is important to know the latest rule when actually calculating the tax payable. No tax is levied up to a certain limit of the taxable income. This is called as the basic exemption limit. Now, farmers' income from agricultural produce is exempt from taxation. Under Section 80G of IT Act, donations to the Prime Minister's Relief Fund, Chief Minister Relief Fund, and certain other donations recognized to institutions, organizations are exempt from taxation. Under Section 80D, installments of premium for health insurance are exempt from the taxation. Generally, the maximum permissible deduction to various kinds of savings under the Section 80C is 1,50,000. Now this all has changed, but this chapter will be calculating it along to the with respect to the 1,50,000 only. Now, deductions from the annual income according to the various rules: tuition fee for 2 children, public provident fund, housing loan, mutual fund, general provident fund, Sukanya Samriddhi scheme for girls up to rupees 1.5 lakh, investment in the post department for 5 years, national savings certificate, life insurance policy, healthcare insurance, etc. Now, rates according to the age of taxpayers are fixed in each year budget. Now, the samples of the table showing tax rates for different income slabs is given below. Now, up to 2,50,000 income tax is nil. Education cess is also nil. Secondary and the higher education cess is also nil. From 2,50,000, 1 rupees to 5 lakh, in 5% on taxable income minus 2,50,000. So 2 per education cess is 2%, and secondary and higher secondary education cess is 1%. From 5 lakh 1 rupees to 10 lakhs, the income tax will be 1,12,500 plus 30% on taxable income minus 10 lakh. Minus 5 lakh and 2% of the income tax and 1% of the income tax. Now, more than 10 lakhs, 1,12,500 plus 30% of on taxable income minus 10 lakh. So, 2% of the income tax and 1% of the income tax. So, surcharge equal to 10% of income tax payable by individuals having an annual income of 50 lakhs to 1 crore rupees, and 15% of income tax by individuals having an income greater than 1 crore rupees. So, use table 1 given above and write the appropriate amount or figure in the boxes. For example, Mr. Mehta's annual income is 4,50,000. If he does not have any savings by which he can claim deduction his income, to which slab does the taxable income belongs? So, annual income is 4,50,000. So, on the first 2,50,000 there will be no income tax. So, what amount he will have to pay income tax and at what percent rate? He will have to pay it on 2 lakhs rupees, and percentage rate is here 5% of 2 lakh. So, on what amount will the cess be levied on on that income tax which you calculate? On that 2% of that will be the education cess. Now for table, this is table 2 for the senior citizens, that is age 60 to 80 years. Now taxable income slabs in rupees up to 3 lakhs nil, education cess nil, and secondary and the higher education cess also is nil. Then from 3 lakh 1 rupees to 5 lakh, income tax is 5% on taxable income minus 3 lakh, 2% of income tax, 1% of income tax on the secondary and the higher education cess. From 5 lakhs to 10 lakhs, rupees 10,000 plus 20% on taxable income minus 5 lakh, and 2% of the income tax and 1% of the income tax. Now more than 10 lakhs, rupees 1 lakh 10,000 plus 30% on the total income minus 10 lakh, and 2% of the income tax and 1% of the income tax. Now surcharge equal to 10% of the income tax payable by the individuals having an annual income of 50 lakhs to 1 crore rupees, and 15% of income tax by individuals having an annual income greater than 1 crore rupees. Now for table 3, means for the super senior citizens, that is age above 80 years, taxable income slabs up to 5 lakhs, it is nil, education cess is also nil, secondary and the higher education cess is also nil. From 5 lakh to 10 lakh, income tax 20% on taxable income minus 5 lakh, education cess is 2% of the income tax, higher and secondary and the higher education cess 1% of the income tax. Now more than 10 lakhs, 20% on taxable income minus 5 lakhs, 2% of the income tax is education cess, 1% of the income tax is the secondary and the higher education cess. Now more than 10 lakhs, rupees 1 lakh plus 30% on taxable income minus 10 lakh, and 2% of the income tax and 1% of the income tax is